Hello, everybody. Happy Monday. Hope everybody had a fantastic weekend. We are jam-packed today. Yes, I'm looking a little bit more casual here, but I'm doing this because this is one of our pieces of swag. One of these. There we go. The short strikers. For those of you that know what the short strikers are, great. For those that don't, I'll talk about what the short strikers are when we get to the spinning wheel later on. But here we are. It is the last day of the month, last day of the quarter. I can't believe it. Clocks turn to October tomorrow. And you talk about witching hour, no pun intended. September is historically worst month of the year, though many people think it's October. It's actually September. This October, though, I believe is, we're going to see some volatility, and especially headed up to the election, I would expect things to remain very, very volatile. What's going on today? Quick review. You know what? Very calm market for the end of the day, or end of the quarter, excuse me. Right now, S&P's unchanged on the day. We've seen them fluctuate mostly in the negative. They're down 10 points or so at their low of the day and up a couple points. But the big mover in the markets today, and has been over the last week and a half or so, the China markets and the Chinese stocks, with all of the stimulus and all of what their central bank has been doing over the last week or so to try and get a jump start on that economy here. The China stocks have been soaring. But on their big move this morning, I'm not so sure, quite frankly, that it can sustain. Demand, economic weakness across China has been miserable, to put it bluntly. Yes, this could help, but I truly think there's a lot of FOMO out there. Okay, so we're going to hit Chinese stocks. And then we're also going to hit something that we hope doesn't happen, but is probably inevitable, a port strike. And those of us that can remember what happened back kind of during the COVID era, when transportation and supply chains were there was a massive amount of gridlock, not a good thing there. Not a good thing. But let's first talk about the state of the markets right now. Got to remember that old saying, past performance not necessarily indicative of future results, right? We've all heard that line hundreds of times. How about now, though? And I bring that up because specific to what happened here in September. Okay? For literally a century, September's been the worst calendar year for stocks. And, recent years, it's been really poor. But with we got half a day, 3 hours of trading left here, stocks are on pace for their best September in more than a decade. How and why? I certainly didn't have that on my bingo card, that we would see that as well. But remember how the month started just a short 4 weeks ago? Just kind of like how it started in August, right? It was abysmal. It looked like it was going to be another, bloodbath here. And then all of a sudden, we're seeing the markets with their best performance in over a decade, since 2013. So I've got the S&Ps up here on the screen. Let me actually get a shorter term. Here we go. So here is the beginning of September. This was that big downdraft. Not quite as bad as we saw here at the beginning of October, but that's what we saw at the beginning of the month. We're like, oh man, here we go again. And yet, we eclipsed 5,700 for the first time in the S&Ps. And right now, going into today, up 2% for the month. Best month for the S&Ps since 2013. Okay, rinse, wash, repeat. Let's take a look now at the NASDAQ. Okay, NASDAQ, such a similar chart here. Bring up a short-term chart of the NASI as soon as this populates here. Come on. And can everybody hear me okay? Robert, Guillermo, I know you're here. Thank you. Everybody hear me okay and can see the screens okay? Okay, excellent. Well, this looks like it may have been the S&P 500 chart. This is actually the NASDAQ. Okay, here's that August swoon at the beginning where we actually touched the 200-day moving average right here. Okay, saw the comeback, and then boom, here's the beginning of September. And yet, what a rally back. Now, we're not at all-time highs like we were in the Dow and the S&P. All-time highs here are just shy of 19,000 in the NASDAQ. But similar to the S&Ps, this recovery for the month has seen the NASDAQ going into today with 2.7% gain for the month. Again, its best performance since September of 2013. Now, one more. Let's take a quick look at the Dow. And the Dow's given back a little bit today. It's down, 100 points or so. We know stocks can't go up forever and ever and ever and ever. But here's the Dow. And again, same chart. August right there. Beginning of September here. And then look at this, guys. Look at this. I mean, this has been like a straight climb up. So far this month, the Dow's up 2.3% for the month. Its best September since 2012. All right, so that's kind of a review of September here. And one point I want to make to everybody here, and this again goes back to what I said at the beginning here: past performance not necessarily indicative of future performance, right? Well, this year marked the first time ever in the history of the markets, okay, that the S&P 500 is going to finish higher 2 months in a row following a 4% or more drop during the opening days of the month. And I'm assuming that, the S&P isn't going to fall, crater between now and the end of the day. But that's pretty remarkable to think that that is the first time that has ever happened. So, can we be optimistic about the markets? I actually was live on Schwab Network this morning talking about that exact thing, and I can post up the interview later on. We probably should be. Yes, there's going to be volatility, and no, stocks just don't go up every single day. They don't go up every single week, right? It's not just a straight line. We get stair steps, okay? However, we are seeing a big broadening out of stocks that are continuing to move higher. Remember, it wasn't so long ago where, one of the biggest headlines out there and all the talk on all the news channels was, the Magnificent Seven and how they're the only ones leading the market, and the market has to widen, has to broaden out, right, for this market to be sustainable. Well, we're seeing that now. We are definitely seeing that, okay? And we've also seen, as we just saw on all three of those charts I just put on, that, investors are coming in on these dips. Is buy the dip still, the best strategy out there? I don't know. It's working pretty well. It works until it doesn't, right? It works until it doesn't. So one last point I want to bring out about September here, and a good, not point of trivia, but a good point of fact, okay? The gains that we've seen so far for this year actually bode well for the rest of the year. And now I'm kind of contradicting myself when I said that, past performance not necessarily indicative of future performance, but if history is any indication here, since 1950, okay, the S&P has gained at least 15% through September 17 times, okay? And in the fourth quarter of those years, the index rose an average of another 5.4%. Okay, is that going to hold? Probably everybody sure hopes so. But even if we're optimistic, even if we're cautiously optimistic, listen, the 2-year anniversary of the start of the bull market is coming up here in October. And with the election going on and obviously still a lot of unrest in the Middle East, you could see some profit taking. But fundamentally here, things are looking pretty decent. Pretty decent. All right, before I move on to what's going on with all of the Chinese stocks, if you want to be entered into today's spin the wheel, just give us a me. Just give us a me in the chat and we'll get you on the magic wheel. Okay, China. Whoa, what a move. And what I'm going to pull up right here, this right here, KWEB, which we actually took a short position in early this morning. This is one of the largest traded ETFs, okay, that kind of represent the Chinese stock market. Okay, and this is just over the last 10 days. This is what I was talking about here. I mean, this is pretty unbelievable right there. Let me see if I can pull up a chart of the MSCI here. If I can't on this platform, I should be able to bring in another chart here. But what we have seen here, given what the Chinese government has done, is absolutely unbelievable. And I think what we are seeing, is a lot of short covering, a lot of FOMO. There's no question about it. A lot of FOMO here. And now there is some optimism out there. You talk to analysts, economists, you watch on TV. There's a lot of optimism out there because things have been so bad in China for so long. They've been so bad for so long. Just the economic situation is terrible. Demand across the board has been terrible. Their housing markets have been terrible. Just everything has been really, really soft. So this maybe has been coming for quite a while here. In fact, here's a chart. Let me show this to everybody here. Okay. This is Chinese and Hong Kong stocks. Okay. Just look at this move over the last month here. Okay. This is pretty incredible move. Now, can all these stimulus measures really help? Can all of the central bank involvement here really help? Well, the People's Bank of China, which is their central bank, what they did is they freed up just an enormous amount of long-term liquidity by reducing their reserve requirement for banks. It cut short-term rates, okay? And what that led to was the best week that we've seen over the last week or so in those markets. I don't think they're out of the woods. That's just me. That is just me. I, again, think that this big spike we've seen has just been a lot of FOMO here, okay? It's been 15 years or so since their last bull market. So I think we got to watch out for it. We got to watch out. And for those of you that don't know, and one of the reasons why I wanted to take that short position this morning that we did, and here's what we did. We actually put on a put spread, a diagonal put spread. So we sold an option, a put expiring next week, and we bought one going out well over a month. Okay, and we used different strikes. As you can see here, we used the 33 strike as the one we sold and the 35 strike as the one we bought. And we bought this for $1.70 earlier today. Okay, now one of the reasons, I thought that FOMO trade was there. Things just got so hot, so high, so quickly. But Chinese markets are closed the rest of the week. They have a holiday. They are closed the rest of the week. Okay? Typically, I don't want to say bad things happen. Not many good things happen when the market is closed. So that's really one of the reasons also why I wanted to get that position on. And yes, sorry guys, FOMO is the fear of missing out. When emotions get the best of you. You remember when you would watch CNBC or whatever it was and GameStop was going nuts and you're like, man, I got to get into that trade. Got to do it. Right? And you just kind of let your emotions take over. That is FOMO, my friends. And one of the worst things as a trader you can ever allow yourself to do is get caught up in FOMO. Not a good thing whatsoever. Okay, now what could derail a little bit in the markets here? It's starting to gain a lot of traction in the news headlines right now. Okay, but as of tonight, midnight, there is the potential, and right now they're saying it's all but a certainty, but I'll call it a potential of a big strike on our eastern ports. Okay, a big strike. If it happens, this could put massive pressure on our supply chains, and some of the expectations are that this could disrupt over 50% of U.S. imports from transportation, food, apparel, footwear, you name it. Okay, so the Delaware River Port, okay, out on the East Coast, that is the biggest port of entry in the U.S. for bananas, pineapple, citrus, okay? So if that happens, boy, just think of all the waste, right? And not only just the waste for any fruit that, just maybe sitting there or on its way over, okay, but what's going to happen to those prices? Yeah, those prices are going to start skyrocketing. So there's 45,000 dock workers who are set to strike at midnight tonight. And again, I don't know, if they will or won't. I certainly hope they don't. But the press is saying it's all but, a foregone conclusion that they are going to. Now, a lot of businesses have been prepped for this, because this is not something that just came about over the last few days or last few weeks. So a lot of business have been prepared for this and trying to get inventory in ahead of this. Okay? Companies like Costco, that's one I bring out to tell everybody about, because they even talked about this exact issue in their earnings call last week. So they have been bringing in more inventory ahead of this. Now, that could be a good thing. That could be a bad thing. If they're front loading their inventory, maybe they get stuck with all their inventory. We don't know. Or maybe that's a great thing, because maybe competitors won't have the inventory and they will. Okay? But suffice it to say that there are going to be massive disruptions. In fact, expectations are here. As I said, it's more than 50% of U.S. imports. Expectations are that this can reduce U.S. economic activity around $5 billion every week. So what's going to happen is, if they do shut down, there's going to be a massive strain on the West Coast ports. Okay? And so it's going to be a mess. It's just going to be a mess. Again, I don't know that it'll be quite as bad as what we saw during COVID when the ports were shut down, but it is going to be nasty. All right, so other stocks that we should watch for, okay? Because this could play a really big role in what happens in the fourth quarter and what happens with holiday sales. And Halloween's not even here yet, but we already have to talk about Christmas, right? We already have to talk about goods that people want to go get for the holidays. And if a lot of those goods can't get in here, boy, we don't want to see more higher prices. Okay, so that's why Costco was ahead of the game. But think about stocks like companies like Walmart, even Amazon, Target. Think about, a stock like the toy makers, Mattel and Hasbro, right? Think about Home Depot, Best Buy, right? Kohl's. These are all, consumer-facing companies. Pepsi, Coca-Cola, Dollar General. I mean, I could go on and on and on and on and on. So if you think about it, if this strike happens and it is protracted, over the last couple days or whatever, nobody wants to see that, but probably doesn't affect anything. Okay? But if it does happen, boy, oh boy, that could be really, really tough. Let me show you. I pulled this here. Okay. These are the top U.S. importing companies. Okay. With the most exposure to an impending strike. Can everybody see that on the screen now? I'm hoping that's coming through. Can everybody see that? Excellent. Okay, so a lot of these companies are the ones that I just talked about. Okay, we've got Walmart right at the top. Walmart right at the top. Okay, then we've got IKEA. I probably wouldn't have thought of IKEA, but that's up there. Samsung. I mean, you can read the list here. So we're going to see volatility here. Now, how would you play this, right? How would you play this? Well, I guess if you're optimistic, okay, and maybe think that even if a strike does happen, that it won't last long and it won't be a material impact to the bottom line, well, maybe you get long. Maybe you think that there's going to be some upside to these stocks. But if this thing does get dicey, let's call it, and it lasts a while, we could see a massive, massive impact to fourth quarter, or actually third quarter earnings, but also, what may happen to holiday sales here. So if you guys want to take a screenshot of this, if you just want to have the, this chart, these stocks, so you have something on your radar, go ahead. I'll leave it up here for a couple minutes. But it's dicey, guys. It's dicey. Now, everything that I've read, and you can read the same thing here, and everything I've read is that the strike is going to happen, but most of the big brokerages out there, JP Morgan, Morgan Stanley, Goldman Sachs, who have all written about it, don't think it'll last very long. Now, maybe that is just being optimistic. I don't know. Okay. If it doesn't, could just be business as usual. Okay. I'm going to take this off the screen. Okay. If anybody needs it, again, just let me know in the chat and I'll be happy to post it back up there. Okay. So let's go back to what can we expect in the fourth quarter now? Okay, what can we expect in the fourth quarter? Going back to the S&Ps here, let me pull up S&Ps. Okay, here's a one-year chart of the S&Ps. Can we move higher? Why not? Why not? Again, is it going to be a straight line? Heck no. Heck no. If we look at, and this was interesting, I was looking at this earlier, which really coincides with how the VIX is structured right now. But if we look at what the expected move is going out to October in the S&Ps, okay, if we look at that at the money straddle with, S&Ps trading, 57.35-ish right now? It's about, close to 140 points. Okay, close to 140 points. So, if we look at that on a percentage basis of where we are right now, 2.5% or so. Okay, 2.5%. Now, let's look out 1 month further, and I'm doing that purposely because I want to take into consideration the election, where we know there's a ton of uncertainty, where we know most likely volatility is going to increase going into the election. And if we go out another month, now we're almost 4.5% expected move. Okay, so there's definitely a bump up in volatility. And remember, the higher the volatility, the more expensive the expected move is going to be. And we could see that directly reflected in how the VIX curve is trading right now. Let me bring that in. Okay, so here's everybody that sees on TV or in our charts or whatever, you see the current VIX price, 17.03. Okay, but that raises up just 1 month from now, 2 weeks from now. 2 weeks from now, it raises up over, what is that, 11%, up to 1910. Now, you might say, why is this October VIX future actually higher than November or December? Okay, does everybody see that? And if you're looking at that, how many of you might be thinking that or might be asking that? And again, I'm going to give a last call out. If you haven't already told me you want to be in the spin the wheel contest today, let me know. We've got it all loaded up, ready to go. If you haven't responded, please respond now. But why do we see that bump up to the October futures and not out really beyond that, where it actually comes down after October? Okay, the reason being is, gotcha already, Motown, thank you. The reason being is because the last VIX expiration before the election is October 16th. The next VIX expiration is the 20th, which is 2 weeks after. Steve, gotcha now, thank you. Is 2 weeks after. So what that is telling us is the market is expecting volatility, but then once the election happens, regardless of who wins, whatever the outcome is, vol will start contracting a little bit. Does everybody understand that? Does everybody see that there? Oh, we got some more Samika. Good. I'm glad I asked out here. Okay, so just keep that in mind here, and we'll keep watching the VIX. But again, I wanted to show you, a comparison of SPX to the VIX here and how closely intertwined they actually are. All right, guys. Well, we're getting to that time now. So let's swing this over into the room here. Everybody see our wheel? And today's winner, we're looking at this swag today. We're going to change it up every now and then. Okay? Oh, the short strikers. For those of you that don't know what the short strikers are, that's kind of the nickname for my room, for the option volatility room. And that's because we always reference where do we want a position to go? Where do we want options to move to in one of our positions? That would be the short strike. Our positions will always optimize and max out potential profit if we are at the short strike at expiration. So, thus, the short strikers. All right, there you go, Robert. That's my countdown here. Let's get the spinning underway. And today's winner is Bill or Francisco. It's Bill. All right, Bill. I don't know your last name or anything here. That's just the handle that you are logged in with. But if you can send us an email right here, send me an email to prosperswag@prospertrading.com. Give me your name, your mailing address, and what size you are, and we will be happy to get that out to you. Congrats, Bill. We're going to close this guy up for the day, and we'll be back tomorrow live on the floor. I know, Francisco, you were just a wink or two away from there. I'm sorry. But yes, I will be back on the floor tomorrow. If you guys, I always say this, if there's anything you guys want me to review, anything you guys want me to talk about, whether it's a topic, particular stock, whatever it might be, you gotta let me know. Just shoot me an email. Have a great trading day, everybody. Happy end of the quarter. John, thank you very much. And we will see you tomorrow. Bye, everybody.